so in love with you.
Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. It is going to be bonkers, you guys. Now, as we move in to 2022, there have been more signs, more warnings, more people sounding the alarm than we have ever had in the past about a potential recession and the fact that we may already be in recession. Yet, there are still millions of Americans that are completely clueless to what we are about to experience. Now, I believe the reason that is we're in a type of dark ages when it comes to learning and when it comes to information. Quite frankly, there is too much information out there, too many differences of opinion that it is blinding people and discouraging people from self-empowerment, self-growing, self-education. And that, you guys, is super duper bad. But the thing is, like I said, the writing on the wall is so clear. And now we're going to continue to unpack that today. But before I continue, you guys remember, even if I wanted to, right now, I am not your financial advisor. I'm a YouTuber sharing with you my opinion. And if you could, please like this video, subscribe to my channel if you haven't already. And as always, you guys comment. I love your comments. Now, we're going to get started reading an article right now titled Federal Reserve Most Anticipated Recession in History May Be Coming. Okay, you guys. So again, to all the non-believers or haters or the people that say just buy, things are only going to get worse, I want to know and I want to understand, what are you talking about, right? There's no more guessing. It's about data. We are clearly experiencing a transition and cooling in our housing market. So how can you explain that, naysayers? How? You can't, because we have data. There's no guessing now. We have the data. Let's read the article right now. You guys, this is a really good article. It's going to be referenced in my description. I suggest you read it because it is definitely sounding the alarm. Here we go. For months, as the Federal Reserve ratcheted up its war against inflation, Fed Chief Jerome Powell insisted that policymakers had everything under control. He stressed that no recession for the U.S. economy was in sight. Remember how he's failed us. Remember that, y'all. Let's continue. The Fed's confidence was underscored by its picture-perfect economic outlook in mid-March. The central bank saw the jobless rate stabilizing at half-century low 3.5%, while inflation rate gradually descended to 2%. I don't know what this is about. Yet, suddenly Powell no longer sounds so reassuring. There could be pain involved in restoring price stability, he said last week at the Wall Street Journal's Future of Everything conference. He added that the unemployment rate may move up a few ticks. You guys, job losses are coming. That is a fact. There is no guessing in that. Powell's new message weaves in hopeful talk about plausible pathways to a softish economic landing. So it may be possible to miss the big picture. He's about as close as it gets to a Fed chair whispering fire in a crowded theater. Do y'all get it? Do y'all get it? Jerome Powell's sounding the alarm. He's screaming fire in a crowded theater. Do y'all get it? Right? Do y'all see the writing on the wall? There's no need to guess. All we need to do now is follow the trends, is follow the data. This is crazy. Listen to what he's saying. He's already failed us, and now he's warning us. So how much worse is it going to get, right? He's already put us in this situation. These changes should have happened in 2021. Pretty much everyone knows that. Anyways, you guys, I apologize. I'm a little bit too passionate sometimes. Let's get back to the article. So what's going on? The Federal Reserve is already tightening policy with both fists. It's hiking its benchmark interest rate in half-point increments and about to reverse pandemic asset purchasing by $95 billion per month. That's huge for mortgage interest rates. Mortgage rates have spiked from below 3% to above 5%. Yet, Powell is signaling that all of that may not be enough. The longer the economy runs and the lower unemployment gets, the higher the Fed will likely have to hike rates to unwind economic excess and tame inflation. And the worse the ultimate recession will likely be. The Fed could be faced with a Hobson choice: push the economy into a mild recession to tame inflation, or wait and possibly cause a more significant recession. So with little margin for error, Powell is drawing a line in the sand to keep the jobless rate from falling further and ultimately to push it higher. And that line in the sand may apply to the stock market as well. After decades of riding to the Wall Street's rescue, a sustained rally might be the last thing policymakers want right now. Do y'all see? Right? Do y'all see what he's saying? Do y'all see what's happening right now? I really hope you guys see it. There is no need to guess. Okay, let's put things in perspective about runaway inflation. Just imagine for a second how much that's actually hurting lower class, how much that's hurting lower middle class and even middle class, and all of you. Look at how much this is hurting. Now, again, I'm saying prepare. You'll be a winner. That's what I'm doing. But nevertheless, think about all the millions and millions of Americans that are completely clueless. Get off TikTok, y'all. Hop on YouTube. YouTube's about self-empowerment. YouTube is about education. Get off TikTok. I'm just saying. Let's continue reading the article. Fed Chief Powell's bully pulpit. I love this part of the article. Former Fed Chief Ben Bernanke observed this week that monetary policy is 98% talk and 2% action. I don't know if you guys remember the video that I made that I said that the Federal Reserve is so powerful that just them talking has massive effects in the market, housing market and stock market, right? I mean, it's amazing how powerful these people are, yet so unprepared for runaway inflation. That doesn't make sense. Let's continue. Powell may be using his bully pulpit to try to convince businesses that pain is coming and that they should act accordingly. The mega banks that the Federal Reserve regulates have gotten the message and are beginning to preach the same downbeat tone. CEOs from the likes of Goldman Sachs and Wells Fargo are suddenly warning that recession may be in the cards. There's no question the economy is headed for a downturn. The Fed's message also appears aimed at Wall Street. The S&P briefly crossed the 20% bear market threshold last week as Powell seemed to shut the window on a rally. Fed officials might be secretly cheering the stock market sell-off, hoping these flames will do just enough demand-sized economic damage to solve their supply-side inflation woes. This is crazy. So what if they're really just tricking us, right? What if they're intentionally giving us the wrong information? Think about that, you guys. This is wild. Powell told the WSJ conference that financial markets are getting through this pretty well. I don't think they're getting through this pretty well, right? I think the stock market is gutted. I think that big and small companies right now are going through massively painful transitions into a post-COVID world. The whiplash from COVID to non-COVID, as far as finances and the cost of living, is completely unacceptable. It is completely unacceptable. And I ask myself, we're in America. We have what are supposed to be brilliant people in charge, right? That we elected. Why the heck is this happening, you guys? That's why you got to trust yourself. You trust your own opinion. You do your own research in your local markets. Don't let other people do the thinking for you. I'm sorry. I apologize. I get passionate. Let's go back to the article. Are we already in recession? Yes. Yes, we are. But let's read the article. Last year's economic boom, fueled by vaccines and stimulus, has clearly downshifted. That's been most evident as the tech sector pulls in its horns. Amazon, after roughly doubling employment over the past 2 years to 1.6 million, is no longer chasing physical or staffing capacity. The company said on April 28th, as it predicted that sales growth would slow to a crawl in the current quarter. You guys, recession, right? The weakness extends well beyond online sales. Amazon rivals Walmart and Target set off a retail stock bloodbath last week as they both reported weak earnings and guidance. Yet a closer look at what happened offers a more mixed picture. The big retailers' struggles didn't stem from a shortfall of demand, but from a higher labor and logistical cost, having stocked up on the wrong inventory. After staffing up in January amid Omicron-related absences, Walmart saw almost all absent workers return in February faster than expected. Weeks of overstaffing was resolved primarily through attrition. Both Walmart and Target said they were stuck with excess inventory because buying patterns changed more than expected. Target noted a downshift in spending on TVs and furniture, while other categories like fashion and luggage showed strength. A surge in gas prices that gained steam after Russia's invasion of Ukraine also forced consumers to alter their spending. Of course, we're in a recession right now. How could we not be, right? How could we not be? Look at all the people, the big companies taking a hit. I'm saying, you guys, Q2 of 2022 is going to be negative GDP, and it will mark the fact that we are in recession. Now, it came faster than even I expected. And I've been warning you guys, and I've been sounding the alarms, yet you guys, I guess I'm even too conservative, right? I don't know how that's possible, but I'm too conservative, and I'm ringing the alarm, right? At least I'm conservative, right? In my predictions of the crash. Y'all, this is wild. I really hope that you guys start seeing the writing on the wall, but more importantly, I really hope that you start doing something about it. Federal Reserve's blunt toolkit. To some extent, Powell's hope for a pullback in job recruitment is coming to pass, especially in the tech sector. Bank of America's data is showing that new job postings, a subset of total postings reflected in Labor Department data, tumbled by 2 million to a still high 6.6 million in April. Yet some see Powell's plausible path to a soft landing as unlikely. They do not have the ability to eliminate job openings without hitting the demand in a way that's likely to spur layoffs, particularly in interest-sensitive parts of the economy. This is scary for tech-heavy metro areas, right? This is super scary for tech-heavy metro areas. To quell inflation, Hopper expects the Fed will have to tighten enough to push the unemployment rate towards 5%. Now, remember, you guys, I'm estimating 6%, 6 to 7%, essentially doubling where we're at right now, right? At least we're getting numbers now. This is really incredible. Fewer job listings won't be enough to avert continued tightening at brisk pace. Powell laid out a pretty clear test for a shift in policy. What we need to see is clear and convincing evidence that inflation pressures are abating and inflation is coming down. Inflation pressures include the low unemployment rate and its impact on too high wages. If we don't see that, then we'll have to consider moving more aggressively. You guys, more aggressively, you guys. So obviously things are only going to get worse. But again, if you're prepared, it's only going to get better, right? I'm prepared, or at least I think I am. So this is all good news to me, right? I'm sitting on the sidelines. So this is great news to me. But I'm going to conclude this video with a couple opinions right now. So overall, here's my thoughts, y'all. As a result of the excess money printing and the excess surging in home equity, breaking all the fundamentals, going above and beyond wage growth, it has really put us in quite a big mess. The whiplash alone from stimulus to no stimulus is grounds to put us in recession and a housing market correction. But the fact that all the financial and economic fundamentals are also broken means that we really are in an economy and a housing market that is made of a house of cards. You guys, this is going to come crashing down. I'm not trying to scare you, right? I'm trying to prepare you. So please, you guys, comment below. Let me know I'm preparing you, right? Let me know that you guys get something from each of my videos, because y'all, it's clear as day now, right? It's clear as day. Anyways, you guys, this is just another video just pointing out the direction we're headed. I'm hoping that people are going to start taking this seriously. I hope you're going to prepare, because remember this, some of the best buying opportunities are during recession. That's why I'm excited. I don't want people to go through this, right? I would prefer balance, not all this whiplash. But the problem is, I was also whiplashed, right? My family were also whiplashed, so I had to prepare. And I am preparing, and I'm sharing that with you. Now, as always, you guys, if you're out there investing in real estate, I do wish you luck, and I hope you win.